Hello, I'm Gregg Wagner from the Kafafian Group, and I'm here with another banking short that we're providing our clients during the COVID-19 crisis. Today, I want to share with you some of the results from our performance measurement processing for our clients for 2019. Specifically, I want to take a look at the three products within residential lending. That's our residential portfolio, selling residential loans on the secondary market, and also servicing those loans. First of all, the profit, quote, within the portfolio of residential lending, the ones that you remain on your books, the profitability on those was 1.10% return on assets, or $2,000 profit before tax per loan. That's pretty good. But contrast that with commercial mortgage product, that the average return on assets is 2.20%. Commercial mortgages is the number one profitable product, and residential is very, very important. It still makes a pretty good return of 1.10%. Let's break that portfolio down even more. How about the loans that we sell on the secondary market? What was the profit on those loans during 2019? Our peer institutions originated and sold 2,740 loans on the secondary market of last year, but they lost $345 per loan, right? So they're losing money on that product. And the service loans, the loans you sold, but you're servicing today, our clients serviced nearly 12,000 loans, and they make $32 per loan. So within the three products, you're making money in the loans you're putting in your portfolio, you're making money servicing loans, but the loans that you're selling in the secondary market, because the margins are so thin, community institutions haven't reduced their cost enough on the origination side to make money selling those loans in the secondary market. Let's take a deeper dive into that. It's all volume based. In the first quarter of 2019, our peer institutions sold 430 loans, which resulted in a loss per loan of $1,400. Okay, for every loan they sold, they're losing $1,400. In the fourth quarter, as we know, volumes of loan originations picked up towards the end of the year. In the fourth quarter, our client base sold 940 loans. That's a 133% increase over the first quarter in loans they sold. They were able to reduce the loss from the first quarter's $1,400 to the fourth quarter, $275 per loan. They're still losing money on those loans, right, that they're selling, but it was greatly reduced. Let's take a look at the cost to originate a loan. This is the cost to originate a loan that put in your portfolio or to sell. In the first quarter, our peer institutions originated 1,017 loans for an average cost of $8,195. That's way, way too high because volumes were so low during the beginning of this year. In the fourth quarter, financial institutions, our client base, originated 2,275 loans for a cost of $4,600, right? So they went from $8,200 to $4,600 cost. The 124% increase in volume helped decrease the cost of originating a loan down to 44%. Okay, so in summary, what we're taking a look at, community financial institutions make money originating loans, putting in your portfolio, make money servicing, but the issue is we haven't reduced those costs enough. If you take a look at non-banks that in the mortgage business or the large banks, they are the ones out there that are reducing their, quote, resources, i.e. people, depending on the volume of loans. Community banks traditionally have not done that, but with the continued decrease in net spreads, we need to look for places to reduce cost. So while the volumes are up now, and hopefully there'll be a quick recovery from our current crisis, and volumes will continue to increase, but once they decrease again, I think the community institutions have to make those tough decisions and take a look at how they process and originate residential loans to lower those costs, use technology, and there's a people issue there too, and how you can use those resources differently to lower the cost so you can make money on all three products, the portfolio, originating and selling those loans, and servicing. And that's where you hit a home run. So if you have any questions about what I covered today or any other questions on performance measurement, products, organization, the profitability of branches, please contact me anytime at gwagner@kafafiangroup.com. Keep well, and thank you.